Hi and welcome to this week's Supply and Demand Forex Technical Analysis. My name is Leon Rowe, currency trader and trading coach at trading180.com. If you're new to the channel and new to my videos, welcome, and if you're returning, welcome back and thank you for returning. I hope you find the information presented in my videos useful. And before we get started on this week's Supply and Demand Technical Analysis, just wanted to say I've changed things up a bit. So if you want to go to Tradingview, right, and check out, well, my channel, Leon Rowe. If you want to search me, go to the ticker, go to people, right, and then do LEONROWE, right, and search me, and I'm going to be putting all of the analysis and chart analysis that I do in these videos on my Tradingview channel, and as well I will be also updating in real time when levels do change and posting them, so you can get real time up-to-date information regarding levels, right, that you may be interested in. Also as well, don't forget to check out the fundamental analysis trading course, which is the link is in the description box below. And also you know, when you click on this link right here, fundamental analysis spreadsheet, it takes you to the spreadsheet, which just basically gives my view on the currencies that I'm bullish and bearish on, which does, you know, it does change from time to time as well, depending on, you know, economic cycle, business cycle, and monetary policy. So getting into the technical analysis for this week, and we start off as we do every week on the Dow Jones Dollar Index. And the Dow Jones Dollar Index is just a measure of the US dollar strength against the major currencies like the pound, the yen, and the euro. And we use this pretty much just to, or this index, just to see, you know, obviously the strength of the dollar. And when it comes down into demand zones, we're looking for bullish price action. If you want to be a buyer of the dollar on, you know, obviously other dollar currency pairs, we're not trading the Dow Jones Dollar Index, but we're looking for dollar crosses, dollar yen, dollar Swiss, and corresponding demand zones or supply zones, depending on obviously the base or the quote currency. So this week we did come down into this demand zone right here before pushing a bit higher, and we're kind of in between this supply zone and this demand zone. Now there was an opportunity to potentially get long as well, and many of you may have obviously seen the supply and demand equation. I'm doing something again a bit different this week, and I'm gonna probably continue doing this. If you guys like I prefer this type of analysis, where I will add the supply and demand order equation, right, depending on obviously like the chart and that. So left chart is going to be supply and demand and where the zones are, and then I'll add the some of the horizontal, diagonal, and dynamic support and resistance. And if you would like to watch the course, the YouTube video on that, the link is in the description box below. It's the supply and demand order equation, and basically pretty much explains exactly why there should be more demand or supply in an area when it comes to orders from a technical analysis perspective. I'm a fundamental and sentiment trader, and I use technical analysis to just to time my entries and get a good price. But this week we did have these levels I was looking at from a daily perspective, right? And but there was an intraday level. If you zoom down into the 4 hour, there was an intraday level right here, which you could be looking at, and you can see where prices did accurately bounce from. So you got resistance, support, bit of support, resistance there, support here, resistance, support. So when prices came down and you got this bullish price action, and prices started going higher on the dollar index, then that was a signal to potentially get long on any of the dollar pairs, right? So this week we're in between supply and demand zones. So if you do want to be a seller of the dollar, right, which in the lead up to potential interest rate hikes in the next week or two, I think it's like 2 weeks, why you would want to be a seller, I don't know, but if we do get any pullbacks into any of these levels, especially obviously from a daily perspective, right, from a daily perspective, if you do get prices come down, if prices do pull back, which means you can buy the dollar for cheaper, and then you have horizontal support and you have diagonal support as well. There will be new traders entering buy trades around here or at this price area. Obviously traders who are getting short from around here, looking to probably take profit at trouble areas. So there should be more demand and supply if prices do come down to this area, which would be obviously the better buy. And if you're looking to sell, then obviously you'll be waiting for price to probably come up into anywhere around these zones right here, with the horizontal levels within the supply zones right here. So again, depending on what price does on the Dow Jones Dollar Index, we use that as confluence on the other dollar currencies. So moving on to the dollar yen. And dollar yen, these are our demand zones. You can see where prices, you know, reacted this week. Right, where we are is really again in between this supply zone here, and then we've got this demand zone around here. So if you do see prices come back down into obviously this area here, and probably this area here would be the better trades. And as you can see, this week we did have diagonal resistance at this area here. It's probably a bit of if you zoom out a little bit, there was, yeah, well, it didn't come all the way up there, but there is some horizontal support as well. See, there was an opportunity to get short depending on obviously risk sentiment. If prices do come down into this area, I do like this this area here, right, where you've got diagonal support, you've got horizontal support from this level here, where you've got resistance, bit of resistance here. Prices didn't really react there, but then you had it here, then you had it here from this wick. You've got it bouncing off of here as well. So just at the top end of this 113 area price zone, and this demand zone, you've got a cluster, quite a strong area. If you're looking at probably some dynamic support and resistance, you haven't got 100 or the 50, but you've got, sorry, 100 or the 200, but you have got the 50 moving averages in this demand zone as well. So if you are looking to buy the dollar, again, wait for price to probably come down into here and wait for your price action. Just because prices do come down into this zone doesn't mean that you should be a buyer, depending on obviously your entry method, right? I'm not saying that you should buy here. The prices could just basically go all the way through depending on what happens during the week. So whatever your entry is, if you do get an entry on a lower time frame chart and you see it, then this would be probably the area that I'd be looking forward to. And if not, then anywhere around these areas where I've got diagonal and horizontal support, probably with some maybe 100 or 200, but 100 is probably around here as well, around this maybe 112 40, maybe 112 20, maybe between this area right here. So those are the two areas that I'll be looking at getting involved in. The dollar yen, dollar Swiss. So dollar Swiss, we did come down into this area right here, right, this demand zone created from last week, and again got a nice opportunity to enter on the long trade. If we're looking at it from the adding the horizontal support, we did have an area here where you had resistance, support, and then this was a nice entry. This is what it looked like in the lower time frame. You can see this entry here, nice engulfing candle. Anyone who's in that trade great setup. Probably trade it if you can to the top of the range. At the moment, we're probably prices just below fair value. What I mean by fair value is if you take the high, you take that low at the moment, value range, so that would be where fair value, maybe first targets potentially if we can get up here, and then this price probably maybe take some profit into some just before this horizontal resistance, and maybe up to here if you're in it. I can see obviously the price of the dollar increasing as we move forward into the rate hike. So but if you want to be a seller, then I would say your first area is probably just right here, and then you've got obviously top of this this range right here to where everyone's probably going to be taking profit. Because if we bought down here and we're taking profit where at these areas here, and if we're taking profit, it means that we're you know, exiting on a sell order, right? And new traders who trade support and resistance are going to be doing what? Entering new trades, trying to get short, right? So you have to ask yourself at the level, why is there going to be more demand at this area than supply, right? From a technical analysis basis point of view. But obviously, as we know, we want to be buyers of the well, I do anyway. I'm a buyer of the dollar for now, so trying to short the dollar. I'm not really interested in shorting, making any short trades unless obviously sentiment towards the dollar, you know, really changes and fundamentals. So those are your options. I think if you haven't got in on this trade here, potentially you'd probably be waiting for a pullback to maybe look for a buy trade there. If that level does fail, then this level here is a decent level. I do like this demand zone around here, and again you can zoom in on the lower time frames to see if you can get a lower time frame entry and apply the supply and demand order equation, horizontal, diagonal and dynamic support and resistances to the chart. Moving on to the dollar CAD, and from a supply and demand perspective, we have come up into this area here. So we are really in between, but we're at the higher end of the range, the high, which is a previous expensive area, right? We know this to be, or a bargain area for the Canadian dollar anyway. But with, I think recently there was, I think it was Friday, data came out where the month on month wasn't great for the Canadian dollar. In fact, I think I've got it here. Yep. Right. So GDP growth rate actually slowed recently to 0.5. If we go to GDP growth rate, and this was the reading, yeah. So that was the 30th of November. And so with GDP kind of, you know, taking the back seat, you could potentially see, you know, prices, you know, maybe break this supply zone. But depending on obviously what happens with the dollar, if the Federal Reserve don't raise interest rates and there's some sort of shock, then, you know, there could be an opportunity to get short. If you're looking to get long, then really first supply zone, you know, around here is the area to try and look to get long. And again, let's look for a bit more detail. So what I've seen, what I've highlighted within this demand zone is where we have first area is where you have this, you know, bit of resistance, bit of support. You've got a bit of support and resistance within this area, right? That being some support there, because if you look probably on an intraday, this is what it would have looked like. Support there, resistance, support, and then you've got a bit of wishy-washy area, but to around this probably 132 round number. I don't really expect this this support, horizontal support, really to hold too much, or it might kind of break through, but I think this 132 area would be a decent intraday buy. If not, then you're looking at this lower area right here, which again on the daily, you've got resistance, bit of support there, resistance, resistance, bit of support here. So more clearer, I would say, this lower area if we do, you know, come down into this area here. Remember as well, the Canadian dollar is a commodity currency, and oil is at the moment not doing very well. So if oil continues to fall, then this is going to be probably better news for the dollar, and not so good news for the Canadian dollar. So you could, you know, see prices break through, especially with the Federal Reserve raising interest rates in the next week or two. So getting short necessarily isn't the smartest move. Doesn't mean that prices won't go down, but it's just if you're taking high probability trades, a short isn't necessarily the highest probability trade. And if you're you know, everyone screams trend trade, you know, just be a bit patient and wait for prices to pull back, you know, to areas, you know, of demand, proven areas of demand, and then try to look to get long. New Zealand dollar, US dollar. Let's go to the supply zones. Yeah, we had this nice supply zone here which reacted a couple of weeks ago, and then we really back up into this area. I do like this area here. I do like this supply zone. It's around a 69 round number. I'm looking for prices to come probably just a bit higher and give some sort of manipulation potentially. But from a supply perspective, again, we've probably got traders trading double tops, looking to get short. If you know, bought anywhere around here, you're going to be taking profit at the top of this area here, around this double top area, trouble area. And yeah, I think it's a decent sell, you know, to buy the actual dollar. And then we can see obviously from horizontal support, and then we've got some resistance. So supply and demand equation wise, it's looking quite decent. You can also always add your own diagonal support and resistance, but I don't think there was any when it came to these levels, which is the reason why I haven't included it, you know, in this. And what I mean by that is, if we go to parallel channel, right, and if we're adding some diagonal support and resistance, by the time prices come down towards here, it's not within any kind of demand zone, right? Here is going to be where the demand zone is. We look for value first, and then we look for the technical analysis side of things. So there's no point in adding the diagonal. Obviously you want to look for the 100 and the 200, right? If there's any confluence within those zones, you've got the 100 if you're looking to be a buyer of the New Zealand dollar versus the US dollar, right? But if you were looking to obviously sell, you can see that you have 200 moving average, which is dynamic resistance, right, coming into this area. So again, decent sell, but just be careful, because I think there could be potentially some sort of manipulation if everyone's, you know, getting short on a level, right, which is obvious. What needs to happen, and I explain it in one of my videos. I can't remember which one it is now. I'm gonna have to go to the YouTube channel, and it's this one here. Sorry to sidetrack and digress. It's this one here: Forex market manipulation, liquidity and slippage, and interest rates explained. Right, watch that video and you'll understand exactly why levels get manipulated, and why you want to probably wait for a manipulation first before potentially getting short. If you're looking to get short now, maybe just enter a small position, or just trade the way that you normally trade. If you want to take the trade, put your stop maybe way above that area here, in a safer place, where you know you're definitely going to be wrong about the trade. So maybe a couple of, if it's probably, you know, at the 60s, 50s, maybe above the 50s, so looking maybe around about 70-80 pips, you know, stop loss depending on obviously how far you think prices are going to go and your risk reward. So from a buying perspective and buying of the US dollar, that would be the area to try and look to get short. To look to get long, you're looking at probably this area here being the best area, If you zoom down into this small time frame, there is an intraday support and resistance area here. So you've got resistance, resistance, and you've got support, support. So if prices do come down intraday and you want to be a buyer of the New Zealand dollar, that's pretty much the area to probably wait for before looking to get long. So let's go on to the pound dollar. Let's look at this just from a supply and demand. So this week we did get some bullish price action. I think there was some dovish comments from one of the Fed chairmen on the dollar, but it didn't really translate into anything major. So you know, the pound, obviously, again, Brexit, trying to get the deal passed through Parliament isn't having the effect. Yes, it was agreed by the European Union, but it was probably the terrible deal for the UK. And in fact, it was. I say probably, but it was. And I don't think Theresa May is going to really get that deal kind of through Parliament. So with more uncertainty, the pound is not really the currency to buy. I'll say this is going to be the first area to look to get short, and then the second area, pretty much, if you are looking to take advantage potentially of some short-term price action and maybe some positive sentiment, then this is going to be the area to look for any long trades from a really kind of like a horizontal support level. Obviously, we've got that level there. If you're looking at an intraday level, you do have this area here. Yeah, you got support, support, support. But again, is it the best move to take? Again, if you do want to be a buyer and you think that the pound is cheap down here compared to the dollar, then be my guest and look for a buy trade. I'll be looking for pullbacks into areas of supply this week if we do get any. Moving on to the pound yen. Pound yen has pretty much just gone sideways this week. So again, if you're looking for a sell trade, you're looking for anywhere around, you know, this supply zone. If you're looking for a buy trade, it has to probably come down into this area of demand. From a horizontal perspective, we've got support here. If you do want to move it up slightly, you know, be my guest, but you know, you've got support, bit of support and resistance in here, bit of resistance, sorry, support here. So if you do have prices again come down into this area here, this is where you're going to be looking to potentially get long. And if you're looking at a short, again, you've got an area where you had some resistance, support, bit of support there, support and resistance, right here as well, where prices came down, support, bit of support there. So if you're looking at getting short, then this is going to be the area to look for a short trade. This 146.5 level, you can see obviously on an intraday of 4 hour, where the it's been prices have reacted from that zone. Moving on to the dollar, euro dollar, and the euro dollar supply and demand. Prices did come up into this area here. We made lower highs, lower lows. I think I actually forgot to put this on the last week's video, and I apologize for that, but there was a level here. As you make lower highs and lower lows, we know that lower highs are strong areas of supply, and you can see where prices came down into, or up into this level, and then obviously reacted. So we go to where any horizontal levels are. from a daily perspective, I think, you know, we're pretty much up into this. We didn't really reach higher into this above resistance level, but I think maybe on a intraday there was an opportunity to potentially get short. You can see something around here, bit of a level here where you had support, resistance, bit of support here, resistance, and the prices came up into this, again, round number, right? Got round number and half numbers. We're looking at this 114 level, right? And then you got some bearish price action. You got that nice engulfing to the short side. I'm actually still in this trade from way up here. Yeah, prices nearly hit my price target. I think price target is at 112, 1.125, maybe 52, I think it is. So prices came down maybe around that 15 pips towards it and then pulled right back. And I'm still bearish, so I'm still in. Not panicking or anything like that. You know, this is just probabilities, and hopefully this is going to be a decent trade and it'll work out. You know, the closer we get to the Federal Reserve interest rate hike. So again, if you want to be a buyer, obviously this week that was probably the entry right here from a daily perspective. That's not to say that prices can't go any higher. If you are in this, then obviously you'll be waiting for prices to go a bit higher. If you do want to be a buyer on an intraday, then I guess this is going to be anywhere around now is going to be really the level to try and look to get long. If not, then it's going to be a lower level right there. Was there any there was a bit of support and resistance within that level as well, if you look back. Yeah, probably around there. Anyways, I'm not going to put it on there for now, but just know that this is lower ends of demand zones and supply zones, but in this case the demand zone is always a decent area to look for long trades, right? So with the euro dollar done, let's move on to the euro yen. I think the euro yen's just moved sideways again this week. Yep, so it's pretty much just again between this this supply and this demand zone, so it's pretty easy. It's going to be the areas if prices do come down into, you know, those supply demand zones. And what I do have from a horizontal perspective, horizontal support is obviously level here. We've had a bit of support here, bit of support as well, touched a few times. So maybe the top of this level isn't necessarily the greatest so far, as we've touched a few times, but decent entry to the upside. If you're looking to buy the euro, this will probably be the better area, the 127 level. Also, what I spotted is a horizontal, something around there as well. All right, so decent area to look to get potentially long here. If not there, be there. And nothing to the upside. But again, if you want to be short, then these are pretty much your areas to look to get short, and there and there. Now moving on to the euro pound. Euro pound, we've come back up into this supply zone, depending on again your bias on this currency pair. This could look like a decent trade to the downside there. Now there is some demand here, right? It's not your typical demand, right? We have made, you know, pretty much a high, but we made a low, and then we made a high. So there is some demand. I'm hesitant to kind of put prices a demand zone here. If prices do make a new high here, then I would say this becomes a stronger area of demand. And in fact, I will put it down. There is demand there, but again, just be aware that it's not a conventional demand zone, and it's not necessarily the strongest area of demand. What I want to see is higher highs and higher lows being made, and this hasn't made a higher high according to my rules. So I will put it here because there is obviously some demand there. If you're looking at it from a lower time frame chart, this looks like a bit of a manipulation where you have a level, right, where you got support, 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 support. A lot of traders put in their stop losses below this area here. It takes out all the stops, then goes on its way. So I think there's definitely, you know, some demand here, but just keep in mind that it's not necessarily the absolute strongest area of demand unless prices do make some higher highs. So if prices do come down on an intraday level, decent long, but again, just keep in mind the best probably area would be here until prices make a higher high. And again, if we're going and looking at horizontal and diagonal support and resistance, let's zoom out a little bit. Nah, nothing. You've got areas of support and resistance in there and there. Let's see if we've got any dynamic. You do have the 100 and the 200 in here as well. So again, this demand zone, potentially if prices do come down into here, it's a decent trade. You've got the 50 as well as the 21, so you've got a cluster. So from a technical perspective, this is definitely, but you've got a lot of dynamic support around here. So it's definitely an interesting area. But from a fundamental perspective and sentiment perspective, it's very, very difficult to trade this pair. And I would personally stay out, and I am staying out, matter of fact. Moving on to the Australian dollar, US dollar. And so last week we did have this level of supply, right? Prices didn't necessarily make a brand new lower low, but this was, you know, this hard in, hard out price movement. So again, there was an area of supply here. You can see prices are reacting more probably to this area of supply right here. So at the moment, a decent short if you can get in, right? If you're not in already, you know, this will be the short as prices have touched this supply zone right here. If you're looking for a long entry, these areas are where you're looking to buy. Now let's look at this from a supply and demand equation. And again, you can see where you've had some horizontal. Let's just clear this chart up slightly. Yeah, so you've had some horizontal support, resistance there. You've got diagonal resistance from the tops joining, and then you've had it, you know, here and here. And from a dynamic perspective, not the 200 or the 100 moving averages, the 21 and the 50 are kind of below it, so you didn't really get any dynamic if you were looking to get short, but doesn't mean you shouldn't get short anyway, as you base our buying and selling decisions off of fundamentals. If you are looking to buy, then you do have the confluence of the looks like the 50s within this area as well. And I think did I see the 100? Yeah, but it wasn't necessarily in within this value area here, so more to do with the 50s, EMAs and SMAs in this area here. So yeah, these I think are your trading opportunities. And again, just because prices do come up into these areas doesn't mean that you should be a buyer or seller. It's just obviously, you know, some opportunities that have come up, right? And we know that there is value here, and there's going to be, you know, the potential supply and demand equation going on at these areas. Just wait for the right price action or your price action when before entering. If you see, you know, your price action and you do really want to be a buyer of the Australian dollar over the US dollar. So obviously for demand zones and looking for short trades, short price action, bearish price action if you're looking to be the buyer of the US dollar. And finally, let's move on to the Australian dollar, Japanese yen. And again, we had this demand zone here, which prices did react this week. Looks like risk was potentially on. Stock market was quite bullish this week, I think, last time I checked. And so risk on. The Australian dollar benefits from a risk on environment. So we come up into the higher end of this supply zone. So potential sells at the moment. Again, if prices do come down into this demand zone, this would be the first area to look for, you know, longs. Now from a horizontal perspective, you can see this area here where you've had, you know, a bit of support, resistance, and support here, resistance, bit of support there, resistance within this, and resistance here at the higher area. So if you are looking to buy the Japanese yen, maybe risk off might come into the market, then now is pretty much the time. If you're looking to be a buyer, then this area here where you've got, you know, support, bit of support and resistance. Looks like a manipulation happened at the time. Resistance, bit of support here within this area of value, right? So that would be the first area to look to potentially get long. And again, if that area probably fails, you've got another area right here where you can see, probably if you just get the top end of that one, where you can see obviously support and resistance. So there'll be support and resistance traders looking at that level, that area here, to look to get potentially long, right? If I'm a shorter from here and looking to take profit anywhere, I have to buy to exit. So there should be some demand here, buy orders from new traders and from traders looking to take profit, right? Why is there going to be more sell orders here from a technical perspective? That's all where we're looking at from a supply and demand technical analysis perspective. And let's just look at some dynamic support and resistance. We've got the 100 and the 200 in this area as well. So dynamic support and resistance, and where are the 21s to 50s? Yeah, so the 21's probably going to be a bit higher, but the 50 is going to be, you know, if prices do come down around here, and we should get some dynamic support as well in that area. So that's it for this week. I hope you did like the new format, and if you want me to continue to you know, do the analysis this way, including the supply and demand order equation, forced and willing supply and demand, and who is basically looking to buy and sell, and motives behind traders, then you know, just comment, like, and even just send me an email, and yeah, I guess I'll continue on. If I don't really get a response, then I'll probably just go back to, you know, the old way, as I maybe prefer that. You might prefer that old way rather than this way. So yeah, please don't forget to like, subscribe, share. Again, if you go onto the Tradingview and look for me, Leon Rowe, these charts will be on my page and updated again as soon as levels get taken out. So and again, I think if you follow me as well, I think there's a follow button somewhere, probably not on my screen because I can't follow myself, but if there is a follow button, I think you get alerted via your email. And so as soon as I post a new chart and an update, you'll get it within your email. So I hope you have a great trading week, and until the next video, take care.